I don't think that I'm exaggerating saying that a massive crash is very likely to happen soon. We see this on many metrics. This is the S&P 500 relative to the US money supply. It's now at similar levels to the height of the .com crash. We subsequently went down by 73%. Or here's Bitcoin. Bitcoin has not outperformed as a risk on asset over the last 9 years. This is Bitcoin relative to technology stocks. Since 2017, the NASDAQ 100 did better than Bitcoin. And here's the performance of the altcoin market. All the altcoins that are listed on Binance in the last year. Pretty much everything is going down. But this here, this is the historical price to earnings ratio. How much are we currently paying for stocks in the S&P 500, so the US stock market? This is a very long-term chart starting 150 years ago. Rarely have we been that expensive in the stock market. And so we have to be realistic here. The last 15 years were not typical for asset performance. Everything tended to expand in their valuations. Thus, we probably want to look for investment opportunities that are not that much risk on, where you can still achieve sufficient returns without being that much exposed to the general expansion of risk on assets. And so I went very deep down the rabbit hole of interest rate arbitrage. Now, this is a more complex strategy, but we have to get a bit into the weeds in order to perform better when most others are likely going to get wrecked over the next 10 years. Now, what are we doing here? We are looking at how expensive is it to get exposure to a certain asset class. So recently, we see traditional finance assets getting listed via the perpetual futures, so derivatives, bets on the price, in the crypto market. In other words, crypto bros are willing to pay 30, 40, 50% per annum to get price exposure to the stock market, to have some leverage in the stock market. Now, this can be twofold. Either those crypto bros just want to get exposure because they know something the rest of the market doesn't, and they don't want to get caught doing insider trading, or they simply just want to bet on the hype and they don't have access to traditional brokerage accounts. And that's our big advantage, because in traditional finance, we can lever up a position very cheaply. We pay maybe 5 or 6% per annum, but then the crypto bros, they're willing to pay a lot. And so we can play that delta. We can bet on a falling price in crypto landscape and on a rising price in our brokerage account. Thus, we are completely neutral to the price movements. The positions move exactly in opposite directions. And the reason why we open that position is because the funding rates are different. Now, is that worthwhile? It is if we have the right leverage, if we pick the right assets. Now, this comes from the premium membership of this channel, right? So this is the interest rate arbitrage page. So for YouTube, I have blurred the exact assets that we can trade, but have a look at how this plays out. There is this particular asset here that has a net carry of close to 100%. So in order to be break even, we just have to be above this red line. We have been above the red line for the last 2 months. And the interest rate, of course, fluctuates based on demand and supply in the crypto market. So we want to find a system to get a combination of those best interest rate arbitrage opportunities, because some of them, they might go down in their APY, and probably opening up that position is not the best today. But opening up others might be much, much better. And again, even if the APY here goes down, it's still above our break-even line. So we're still making money, even if it's over here. And this is quite a bit, right? This here is 40%. So we are fluctuating at a low level between 30 and maybe 60%. And then when it shoots up, we go above 100. So that's the kind of returns, risk-free returns, risk-free in the terms of price movements, that we can achieve if we learn those kind of strategies. Now, the reason why this is profitable is because most people don't play several asset classes. Most people have their favorite asset class. So they just trade crypto, they just trade stocks, they just trade property, or they're into precious metals. Very few people play the inefficiencies across different ecosystems. And that's where really the money is made. The same is true, for example, diversification, right? Most people think they are diversified by buying the S&P 500, so by owning 500 different stocks. But this is not how diversification works, because there's so much correlation within the asset class, right? When Google goes up, then Microsoft goes up as well, and Netflix goes up as well. And when those things go down, they all go down at the same time. You've got the same problem in the crypto market, right? When Bitcoin goes up, all the altcoins go up, and vice versa. The real diversification is achieved across asset classes. And the same is true here for interest rate arbitrage. The real money is made by crossing the boundaries. So we want to have both a brokerage account, but also a crypto account. Now this interest rate arbitrage platform works with different assets that are listed on Hyperliquid, Gravity, and Lighter protocol. And for the centralized exchanges, we've got Binance, Bitcoin, and MEXC. I'm just signed up to the ones that are currently highlighted, so that's what we see over here. The question is, what kind of assets should we then trade? And how often should we trade it? Here is the backtester. Now, I don't want to explain this in detail. All you have to know is that we just look at our portfolio once a week. We could set this to daily, we could set this to hourly, then the returns are higher. For hourly, obviously, we want to automate this. And then we can set how diversified do we want to be. So let's say we have got two different interest rate arbitrage positions open at the same time. We run the backtest and then we see our return. This is what we can achieve. 62% per annum with extremely low volatility. Every single dot here, that's when we change the position. So we tend to keep it open for a while. If we rebalance weekly, on average, we change a position every 17 days. And the average profit per trade is 2.7%. That's before fees. After fees, it's 2.4%. And the win rate, and that's the beauty, is 88%. So there are some interest rate arbitrage plays that are not profitable, but the vast majority is. And so we can optimize this, right? We could, for example, look at the portfolio every single day. Then our annualized return moves from 62% up to 65%. And instead of holding the top two positions, we could just go with the very best trade, which of course is not as diversified. So now we'll see how the annualized return will go up and the Sharpe ratio is probably going down. There we go. The annualized return is now 80%. The Sharpe is only 7.4. So there's a bit more volatility, but we do get 80% annualized without much price risk. The reason why this is not always going up is because funding rates fluctuate. And if you, for example, entered the position over here and then the funding rate turns negative, yes, you did get a bit of a loss. But tell me somebody that would not be happy with a return like this, with the consistency of the return and also the size of the return. The more diversified we are, let's say we take 3 positions at the same time and we only rebalance monthly, the lower our return gets, but also the safer we are and the less hassle we have. 50% per annum is still very, very nice. And so those are the kind of strategies that I currently prefer. So I don't want to necessarily make a bet whether or not risk on assets will continue to expand or if Bitcoin is already cheap or will crash further. I think the real alpha in this market is to be made when nobody is looking. Now, I don't want to get too much into technical detail in this YouTube video, but I have published a premium video that's now available for everybody, and that's linked down below. The website will look slightly different, but all you have to do is enter your email address. You will get the video, and with that video, you will also get what's currently one of the best interest rate arbitrage plays. So that's 100% free. You will not get access directly to the backtesting tool. Again, that's for the premium members. You will not get updated arbitrage trades. You will get a single trade that will make you money. At least the likelihood is very high. And once you've made some money, then you can consider whether or not you want to reinvest that to actually sign up for the premium membership. So that's the entire idea. The product should be paying for itself. And once you decide to pull the trigger, there's even a 7-day money back guarantee. But again, right now, simply start with that very first free setup. You get the instruction video, you get the position. Just click on the link down below and put in your email. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.